The topic of today's panel is making strides in counterparty credit risk. It's very important today. We live in a very liquid, very dynamic world when every day brings some news about new exemptions, about new deadlines. It's pretty hard to follow all of them, and I think that people who are in charge of basically calculating this risk, in charge of hedging, managing this risk, they are pretty much stretched and overwhelmed. And that reminds me of the story of a CRO of financial company who happened to stumble upon the old oil lamp, and he rubbed it, and lo and behold, genie comes out of this, and his genie says, like, I was imprisoned in this lamp for 1,000 years by evil sorcerer Jafar. You freed me. Thank you very much. I grant you 3 wishes. What do you want? So this CRO scratches his head and said, okay, I want my bank to finally complying with Basel II. I want my bank to pass with flying colors new CCAR, which is, for those who are not from US, is stress test. I want my bank to comply with Dodd-Frank. This is my first wish. So the moral of the story is that even if you have genie, even if you granted 3 wishes, it's not enough. Maybe you need 3, maybe 4 or 5 genies, because we have clearing, we have Basel III, we have accounting, we have really a lot of new and changing stuff. And I hope this panel will help you to understand some of this, maybe answer some questions. And without further ado, I will introduce our panel. We have very experienced people here. Everyone has 15 or 20 years in financial industry. Starting from far right, left on your side, we have Tanvir Bhati, a global head of valuation control and analytics group in Citi. Prior to joining Citi, he was CRO of Emirates Bank Private Banking. Tanvir also had 12-year career in JP Morgan before this, and Tanvir was a research scientist and has experience. His background is from mathematics and physics from Cambridge University. Next, Frank de Jong, his partner in Ernst & Young. He leads quantitative advisory services across EMEA, also a country leader for risk advisory in Belgium. Over 12 years of experience and advisor. And before this, before entering advisory services, Frank was equity fund manager. Also has a PhD in theoretical physics. Next is Duncan Richford, currently head of capital optimization, co-head of CVA in CBA, Commonwealth Bank of Australia. He has been with CBA just recently, since September, but before this, Duncan spent 10 years in UBS and 5 years with Lehman Brothers, basically trading and dealing with hedging, pricing and executing structured trades within rates, FX, credit, and hybrid derivatives. Myself, I came from quantitative background. Now I am head of research with Quantifi. Before this, I was head of counterparty credit modeling with JP Morgan, and before this, I was head of credit quants with Bear Stearns. So you have here very broad kind of panel. We represent all sides of this issue: quantitative, advisory, trading, credit risk, so, and of course hybrid of this. So as I said, maybe we should start. And first question which we have on our agenda is new accounting standards and trends in accounting for CVA, DVA and FVA.